Okay, welcome back to episode 7. Actually, it's just chapter 7. And this chapter, we're going to be covering posting and creating a trial balance. But before we do that, I want to kind of quickly give an overview of last chapter, chapter 6, where we recorded transactions in a journal, and then use it to reflect on what's going to be happening in our next chapter. Notice in our journal, it is in sequential order. As the transactions happened, we recorded them in chronological order. It's important to do that because if any time we have a question about what happened on, say, March 10th, we can go back to the journal and find out what was going on then. It's also helpful because we don't have to worry about going to a lot of different forms. As the transactions are happening, we're recording them here. However, it's really hard to figure out what's going on in each individual account when you're looking at this journal. If you would take a look at this, could you tell me at this moment how much cash this business has on hand? Well, you might be able to say, they have 50,000 here, and they have, let's see here, added another 6,000 there, and they went down by 2,000, but that would have skipped over this one here where it went down by 1,500 and didn't take into consideration that one or that one. The point is, we don't know how much cash there was to begin with. There's always a chance you're going to miss one of these, and you won't know exactly how much cash you have on hand. So it's really important to take what we put in our journal and post them to individual accounts. If you recall, in chapters 4 and 5, we worked with T accounts, and every account had its own T account. We're going to be doing something similar here, only we're going to be taking it not from the actual transaction, we're going to be taking it from the journal and then posting it to an individual account. Give me just a second, I'm going to switch to a PowerPoint here. Now we're going to start talking about what is a general journal, how do we post to it, etc. Accounts used by a business are kept on separate pages or cards in a book or a file called a ledger. If it's an electronic file, it would have its own file. It's important for a number of reasons. One, this creates a record of the impact of business transactions on each account used by a business. So every time a transaction occurs, we now know, is our cash going up or is it going down? Do we owe more to that business or do we owe less? And it also helps managers easily find the current balance of a specific account. If I have a customer that owes me money, they might call me up and say, well, how much do I owe? And I can easily go to my general ledger, look up the accounts receivable account for that person or that business, and say, hey, you owe me $600. And at that point, they can say, well, okay, I'll pay 300 of that now, or I'll pay all of it, or I'll make note of that so that I can save the money to pay you at the end of the month. Posting from the journal to the ledger, or when we move from the journal to the ledger, is called posting. It's the process by which the random transactions become organized in a manner according to the accounts. Just another definition there. The general ledger provides up-to-date balances for each account, including accounts payable and accounts receivable, which is what I was talking about earlier. We can know at a moment's notice how much we owe a particular company or how much somebody owes us. In a computerized system, electronic files are still referred to as a ledger or a ledger account. Just because it's computerized doesn't mean that it's going to be different. We're still going to have individual accounts for each account under each of our classifications. Managers use ledgers to obtain summarized information. We've said that before, it's a little redundant. We're going to call that collection of accounts a general ledger. I'm going to skip past this. I don't think it's very helpful. I'll just make note here that ledger account forms are the accounting stationery used to record financial information about specific accounts. We're not going to be using T accounts anymore. We're going to be using actual accounting stationery. This is what a 4-column ledger account form would look like. And some of you may be saying, but there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, etc. columns. That's not what they're referring to. Rather, they're referring to these debit and credit columns. Any place where we would be recording dollar amounts. We have 1, 2, 3, 4 of them in this particular on this particular form. Later on, we're going to be working with a 6-column form. and just means that we have 6 places to write dollar amounts. I'm going to go past this again, and let's take a look at how the process you would follow to record a transaction or post a transaction from the general journal to the individual accounts. We're going to go through cash first. Notice on October 1st, we had Cash and Bank and Krista Vargas affected. We're going to work with Cash and Bank first. You're going to find the Cash and Bank account in your general ledger. You'll come down here and you will record the date, just like we did on a journal. Year at the top, month, day. After that, you don't have to put the year and month anymore. The second step is to actually put a description. Now you'll notice that this one doesn't have one. The reason we don't have one is because of this little thing right here, the post reference. The post reference says that we're getting our information from General Journal, page 1. So as long as we know this, we know that we can go to General Journal, page 1, look up the date, find the transaction, and this right here, Memorandum 1, tells me what I need to know about this transaction. I don't have to rewrite the description. There are going to be a couple of transactions later on in the accounting cycle where we do have to put a description in there, but for the most part, most of these regular transactions won't have one. So as I was saying before, the third step is to record the post reference, say where we got it from. It's coming from the General Journal, page 1. These 2 columns here, these first 2 columns, they're where you're going to record the actual amount of the transaction. In this case, cash was debited $25,000. After you have recorded how much the transaction is, then you come to these 2 columns and you decide, well, how much cash do I actually have on hand? Or how much do I owe somebody? Or how much office equipment? In this case, we didn't have any cash before. So 0 plus 25,000 means that we have $25,000 worth of cash. The last step is to take the account number, which is where we got this from our chart of accounts, and we're going to bring it back to the journal and we're going to record the account number right there. A lot of students think that's the easy part and they will start just recording all the account numbers. You don't want to do that. This, when a number shows up here, it means it has actually been recorded here already. If somebody else is going to be stepping into the office and wants to continue on with the posting process, they need to know where you left off. And if you've written all the numbers already in there before you've actually posted them, then those transactions will not get posted. Excuse me. After you do the first line, then you have to do the next line of the transaction. If there's more than 2, you're going to do more than 2. But this second one, we're going to go down to Krista Vargas. We're going to write the date. We can skip the description, say where it came from, General Journal, page 1. It was a credit of $25,000, so we're going to record $25,000 down here on this set of columns. And then we come to the balances, and we say, okay, now how much is Krista Vargas worth? Well, she was worth nothing before, and when I add the $25,000, she's now worth $25,000. In a second or so, I'm going to show you some some postings that are going to change your balances over here. Oh, didn't take long. Here we are. So here's the cash and bank account. Here's that first transaction we were working with. It was posted from the ledger, or from the journal. $25,000, because there was nothing, we had $25,000. Now on the 31st, we posted this transaction from General Journal, page 2, only it was a credit of $500. If you recall, we increase on the debit side, decrease on the credit side. Since this is on the credit side, it's going to decrease our total cash by $500. You're not going to simply write 500 over here, just like we copied over here. Rather, you're going to say, if I have 25,000 and my cash is going down by 500, that means I still have $24,500 left. Likewise, on November 1st, we had a transaction that appeared on General Journal, page 2 for $125. we don't just have $125 left. Rather, we have $24,500 minus $125, and we're left with $24,375 in cash. Excuse me. And some of you might be asking, are we ever going to use the credit column? Probably not. The credit column is not our normal balance side for cash. If we end up with a balance over here in the credit, it means that we've probably spent more cash than we actually have. There are some accounts where it might go back and forth a little bit, but for the most part, it's going to remain on the normal balance side. So if cash has a normal balance side of debit, it'll be over here, whereas accounts payable, its normal balance side is credit. So you're going to see all of the balances appear in the credit side. Here's an example of a ledger account with a zero balance. So in accounts receivable, Green Company must have purchased something for $200, and so we recorded it on the debit side, giving us a balance of $200. But then on the 14th, just 3 days later, G1, we recorded a credit of $200. Our balance is zero. Instead of writing 0, 0, 0, you're going to write just a straight line to indicate that they no longer owe us anything. Now, if they borrow money again or purchase something on credit again, we'll end up having a balance again. That doesn't mean that we're done with this column. It just means at this point in time, we don't have a balance. Okay, hopefully you have everything that you need. You have your workbook on page 98 and a writing utensil of some sort. Posting, once again, is an official act for accounting records, so you're going to need to use a pen, blue or black pen. For now, though, since we're just learning, you may use pencil. I'm going to go ahead and use pen so you can see it better. This particular journal has not been numbered, so if you haven't already, go ahead and put a number 1 at the top on the page so we can use that as our post reference number. If you look on the following pages with 99 and following, you'll see that we have accounts that have already been opened for each of our accounts. They've done the work for you. We're going to have those handy. You have several pages of them actually. And we're just going to work through the process of posting some transactions. After a while, I'm going to turn you loose to do the rest on your own, and we'll come back and check them. But let's do maybe the first 3 or 4 together. This first one happened on March 1st, and the first entry was for cash and bank. So I want you to go to cash and bank. I'm going to have both of them kind of handy here. And we're going to start with our date. You have to actually put the year in. Start with March 1st. Remember, you can skip the description, but we have to say where we got it from. We got it from General Journal, page 1. So G1. We deposited $5,000. So this is our transaction. We'll write 5,000 on the debit side. And then we take our balance, add the 5,000. We're left with 5,000 in cash. And the last thing we're going to do is we're going to take that 101 and we're going to record it in here. It means we are done. We have done that portion of the posting process. If you should get a phone call at this point, or somebody stops at your desk, or I don't know, a mouse runs after you over your foot, you're going to get disrupted. You may not remember where you left off. If you've already put the number there, but yet you haven't recorded it in the journal, your accounting records are going to be off. For this next one, we need to go to Ronald Hicks Capital. So find the page for that. I'm going to just fold this over so that you can see the transaction as we record it. This, once again, happened on March 1st. No description. Post reference is still G1. It was a credit of 5,000. And then we take a look at our balance. Did we have a balance before? No. So 0 plus 5,000 means that we have a balance of 5,000 in our capital account. And then the last thing you're going to do is record 301 in the post reference. You don't have to do anything with the memorandum line. Now we're going to move down to March 3rd. You're going to need office equipment. So find office equipment in your general ledger. March 3rd, you start with the year. No description, G1. This time it's 3,000 on the debit. Since we had nothing before, it's 3,000 on the debit. And then we come back up here and write 120. Pretty simple, pretty simple. All right, let's go to accounts payable, Digital Tech Computers. Maybe. Be patient with me. Be patient, little one. All right, here we go. Accounts payable, Digital Tech Computers. I'm going to start with the year. Oops, you can't really see that very well, can you? March. This is 3rd. No description. Post reference is G1. This time it was 3,000 on the credit. 0 plus 3,000 equals 0. Or excuse me, equals 3,000. And we write 203. I'm going to go quickly through, I'm actually going to go through the next 3 transactions. If I'm going too fast, just pause it every once in a while to get caught up. And then I'm going to turn you loose. Let's go to camping equipment. Camping equipment, 2,000, March 4th, G1, 25,000 on the debit. 0 plus 20, or excuse me, 2,500. 0 plus 2,500 is 2,500 on the debit side. And then I write 125. Now find accounts payable adventure equipment. Start with the year. March 4th. G1. This time it's 2,500 on the credit, leaving us with a balance of 2,500 on the credit. And then I come back up here and write 201. The next transaction is office equipment. Oh, we've seen this one before. Let's go to office equipment. This one's happening on March 6th. Since we've already had a transaction in March, we don't have to write March of the year anymore. We just write 6. This one was, once again, on G1, and it was a debit of $100. Now, prior to this transaction, we had $3,000 worth of office equipment. Do we increase or decrease, or do we increase office equipment on the debit or the credit side? Well, you increase it. So if we're increasing on the debit side, we're going to increase our balance by $100. And our new balance is $3,100. And then you would come back over here and write 120. Now slip over to Ronald Hicks Capital. Ronald Hicks Capital, once again, we've seen this before. We're going to go to March 6th, G1, $100 on the credit. Ronald Hicks Capital increases on the credit side, so it's going to increase my balance from $5,000 to $5,100. And then I come back up here and write 301. Here's my last one that I'm going to do with you. Cash in bank. Can you see that one okay? There we go. We'll start with March 8th, G1. This one was 6,000 on the debit side. Since we increase on the debit side, we're going to increase our balance by this amount. So they now have a new balance of $11,000 in cash. Come back up here and write 101. Equipment rental revenue. Oh, I lied. I'm going to do one more. I just feel the need. Let's go to equipment rental revenue. Let's finish up the 8th here. Oops, that wasn't very good. Give me a second here. Equipment rental revenue right here, March 8th. We haven't done one here on this particular account yet, so we have to actually write the year and the month. Still no description. This is from G1 again. $6,000. Oh, I made a mistake. What side should it be on? It should be on the credit. Here's an easy way to fix your error. Do not scribble it out. Do not draw arrows, like circle it and draw an arrow over there. This is how you fix it. You put a single line through it and put it where it belongs. If you write an incorrect number, just write a single line through it and right above it, put the correct number. So I had 0 in credit. I'm going to increase revenue on the credit side. So I'm going to have a balance of $6,000 on the credit side. And I'll come back over here and write 401. All right, here's where I lied. I said I'm gonna do one more transaction. That's on the 10th, because I want to show you what happens when cash in bank actually goes down. So let's start with our first one, accounts payable, Digital Tech Computers. Oh, so patient. All right, here we go. On the 10th, from G1, we had a debit of $1,500. What happens on the debit side of accounts payable? It goes down. So that means our balance is going to go down. 3,000 minus 1,500 leaves us with a balance of 1,500. Come back up here and write 203. Let's go to the cash in bank. Cash in bank on the 10th from G1, we had a credit of 1,500. How do credits affect our balance? Well, it makes our balance go down. So in this case, 11,000 minus 1,500 leaves us with 9,500. And then I'm going to come back up here and write 101. All right, hopefully you've gotten a good feel for this. What I want you to do is I want you to finish up the rest of the transactions, 12 through the 30th. And then I want you to return back to the video, and we're going to check your work. Okay, welcome back. Let's check your work. You were to have completed transactions from March 12th to March 30th. So if you had done them, these numbers should appear here, but remember you don't put the numbers there until they've been posted. Let's take a look at the accounts. When you were all said and done, you should have ended up with 7,000 in cash and bank. Accounts receivable held in cash should have been a blank or just a straight line because it was a 0 balance. Accounts receivable Polk & Company had 24,000. 2,400. Office equipment 3,100 on the debit side. Camping equipment 2,500 on the debit side. Then starting with accounts payable adventure equipment, they ended up with a balance of 1,300. Accounts payable digital tech still owes us 1,500 on the credit. Ronald Hicks Capital has an investment of 5,100 on the credit. Ronald Hicks withdrawals was 2,000 on the debit. Equipment rental revenue was 9,400 on the credit, and advertising expense was 300 on the debit. Okay, now that you know how to post from the journal to the general ledger, that was step 4. We're going to follow up with our last, I shouldn't say our last one, but step 5, which is to prepare a trial balance. In the past, I've always had you add up the normal balances that have, or all the debit normal balances and all the credit normal balances to check to see if they were in balance, if they equaled each other. Well, that's what a trial balance is going to do in just a little bit more of a formal format. In chapter 5, I believe, at the end of some of your assignments, you started creating a trial balance and you didn't even know it. If you first take a look on page 180 of your textbook, I'm going to zoom in on this trial balance here. If you recall at the end of chapter 5 or 6, I can't remember which one it was, I asked you to list all of the accounts, all of your T account names. And then I said, over here, on the, if it is a normal debit balance, I want you to write the balance of that particular account. So all of your assets were on this side. And then if it had a credit normal balance, I wanted you to write them over here. Well, voila, that's what a trial balance is. The difference is we have a 3-line heading at the top. You're going to start preparing more financial statements. All financial statements are going to have 3 lines at the top. They are going to answer 3 questions: who, what, and when. Who is the name of the company? What is the financial form that we're preparing? And when is the date when it's prepared? Now this particular one, we just use a very simple date. We say the date that we prepare it to see if the debits and credits balance, that's the date that we're going to record there. Notice also that in addition to the account names, we also put the account numbers off to the side. Sometimes the trial balance forms will actually have a column over here instead, and you put the account numbers over here. It doesn't really matter. This is what's important though, is having the balances on the correct sides. And then down here, notice I have a single line under my last entry. It goes all the way across both columns. That's called a single rule. A single rule simply means I'm ready to calculate the column. I'm ready to do some sort of calculation. Usually it's addition, but sometimes it's subtraction. You're just simply going to add all of your debits and write the amount there. Then you add all your credits and write the amount there. If they balance, and only if they balance, you may then draw a double rule, a two lines to indicate that it balances and you're done. If they don't balance, you have to go back and try to find your errors. Now in your textbook, turn to page 180. I'm going to move down, I guess it's the same page that we're on. At the bottom of the page, it talks about 2 very common errors. One is a transposition error. A transposition error is when you actually switch 2 numbers around. I do that a lot. It's not uncommon for me to switch a 5 and a 7 around, or a 2 and a 3 around. Another error is called the slide error, and that occurs when you accidentally put the decimal point in the wrong spot and you move it over. I'm going to lift up the screen here a minute and show you a couple of examples up on the marker board. So give me just a second. I realized where I'm positioned, you don't get to see much of the marker board, but I'll just do it here. A transposition error is one in which we should have written maybe 164, and instead we wrote 146. A slide error is when we were going to have maybe 1,243.10 cents. I have 10 cents, and instead you wrote $12,430, let's say $31.00. We just simply moved the decimal over 1 spot, and it made a huge difference as far as the numbers are concerned. Another way that you could do it is actually move it this way, and instead of writing $1,243.10, you might have written $124.31. And you'd be surprised how often these 2 errors happen. So How should you find your errors? Well, I think the first thing to do would be to go back to see if you actually copied the right balance to your trial balance. Actually, the very first thing is just re-add your columns. That might be the simple error. Second thing to do would be go back to see if you copied the balances correctly. Third would be to go back and look, re-add or recalculate all of the balances on each of the accounts. If you have not found the error by then, you're going to have to take it one transaction at a time and look to see if you recorded a debit and a credit and they balance. If all else fails, you go back to the book or back to your source documents and you reevaluate the transaction. But you always want to go backwards because it might be just a simple error and it wouldn't require a lot of work on your part. All right, we're going to work through problem 7-6 together to practice preparing a trial balance. On pages 101 and 102 of your workbook, you already have a completed journal. They have already posted the transactions, a completed ledger. They've already posted the transactions from the journal. We are just simply going to check their work to make sure that it's been done correctly. We're going to start by finding our trial balance form. I'm going to move this up here. We're going to start with our 3-line heading. I'm going to read this out of the textbook. The textbook says problem 7-6. It says the ledger account for Hot Suds Car Wash is shown in your working papers. Prepare a trial balance as of March 31st of the current year. If you don't know where I'm looking in your textbook, it's right here. We're working with this company. It's going to happen on March 31st. That's the information we need to fill out the top. We are working with Hot Suds Car Wash. This is a trial balance. And we're preparing it on March 31st of the current year. Now these 3 lines are probably the most overlooked lines in Intro to Accounting. I don't know how many times I've had to circle this up here because the student has forgotten to write those 3 lines. You want to make sure that you do that. We are going to be using the accounts that start on page 101, and you're simply going to list them in the order that they appear in the ledger or on the chart of accounts. So I'm going to start with cash and bank, which is account 101. And it has a balance of $17,000 on the debit side. Then we're going to look at accounts receivable, Valley Auto, account 110. And it has a balance of $1,000. I'll do one more with you, then I'm going to turn you loose to try it on your own. We'll come back and check your work. Detergent supplies is account 120. And it has a balance of $2,000. I'll have you stop the video now and finish up the trial balance, or at least recording the balances for each of the accounts. Don't forget that if it has a credit, you're going to record it on the credit side. They also list income summary up here. Income summary should be listed on the trial balance, but it will have a 0 balance on both the debit and the credit side. So stop the video, finish this up on your own, or at least listing the balances, and then resume the video when you're done. Welcome back. If you have recorded all of your balances from all of your accounts, it should look something like this. Some of you may have gone ahead with the last part, and that's okay. But notice once they are listed, we need to actually balance them. We're going to put a single rule, not all the way across, just under the columns. And it's hard to see that, but it should be one single rule. You're going to add up all of the debits. If you haven't done that, just stop the video and add them up. If you have the right numbers, however, you should have 50,500. Do not just assume that this is going to be 50,500, because if one of these numbers is wrong, then we know we have an error somewhere. Add those up. In this case, I do know that it's 50,500. If it doesn't balance, find the error. But since mine did balance, I'm going to end it with a double rule to say I am done.